Hey, Boris, Musheyev here. Welcome to another training, and in this video we will talk about when is the best time for you to switch from an LLC to an S corporation. So let's get right into it. And we're gonna do it in 3 steps, right? We're gonna define that in 3 steps. Number one, first we really have to understand why a lot of business owners choose to be taxed as an S corporation, right? Why S corp? Right? The second reason is that when should you elect an S corporation status, right? When S corp, right? And the third reason is when not to elect S corporation status, okay? When not to elect S corp. Okay, really important. In order for you to understand when is the best time for you to switch to an S corporation from an LLC, you first need to understand these 3 things, right? So why do a lot of business owners choose to be taxed as an S corporation? It's the answer to this is very simple, because it is cost efficient in terms of taxes, right? So before we get into that, you have to understand something. When you form an entity in United States, right, there's 2 types of entities you can form. You can form a corporation or you can form an LLC, right? By default, when you form a corporation in United States, you are by default considered as a C corporation, okay? If you are a C corporation by default and you're going to be making profit in your business, you definitely should elect to be taxed as an S corp right away, because there is no double taxation. C corporation means double taxation. That means you pay tax at a corporate level, but at the same time, right, you're going to pay taxes when you take the money out of the business. So that is what refers to double taxation. Okay, awesome. Now with an LLC, so like I said, in America, you can either choose 2 entities, corporation or an LLC, right? In this video, we're going to talk about when to choose an S corp from an LLC, right? But why do business owners choose to be taxed as an S corporation when they open an LLC? Because LLC is considered a disregarded entity for tax purposes. In layman's terms, sole proprietorship. That means you get to report income on your personal income taxes, and you're going to pay 2 types of taxes on it. You're going to pay federal income tax, whatever tax bracket that you're in. So if you're in a like 25% bracket or 30% bracket, right? Or you're going to end up paying tax as self-employment tax, which is the 15.3%, the most dreaded tax. I call it a penalty tax for being self-employed, okay? So in order to avoid the 15.3% additional self-employment tax on all the profits that you earn in your LLC, that is why a lot of business owners choose to be taxed as an S corporation, because S corporation does not pay self-employment taxes on the profits. Instead, it pays self-employment taxes on the salary, okay? So whatever salary you're taking out, that is what is subject to 15.3% in taxes, okay? The profits of an S corporation are not subject to 15.3% in taxes. I don't care what anybody tells you. The most main reason, right, why a lot of business owners choose to be taxed as an S corporation, okay, is because they want to avoid paying 15.3% on the entire net profit from an S corporation, okay? That is why we have an S corporation. It's small business corporation. But one thing I want to make very clear, in this video, we're obviously talking about LLC being taxed as an S corporation, when to do so, right? But if you form an entity in the United States and you form a corp instead of an LLC, just know that by default, you are a C corporation, which is subject to double taxation, right? So you should elect to be taxed as an S corp right away, unless you have your reasons to be an S corp. If you're an LLC, a single member LLC, even LLC with partners or LLC with husband and wife, you're automatically subject to 15.3% tax, and you can elect to be taxed as an S corporation, okay? You can elect to be taxed as an S corporation, only pay self-employment tax on the salary. Now, let's talk about the second reason, right? The second thing is that when should you become an S corporation? And that is really important, because in order for you, before you become an S corporation, you have to take 2 things into consideration. Thing number 1 is profit. All right. Thing number 2 that you have to take into consideration is state and city. State and city. Look, I'm going to tell you this, something really important. A lot of people a lot of business owners hear about a concept of an S corporation and they start consuming a lot of video content on YouTube, which is great. You should always consume content to educate yourself. They start reading articles, and based on the information that they find by themselves, they make a decision of what to do. Oh, S corporation will save me money on taxes, so I'm going to become an S corporation. No, you must always have a tax planner. If you have a tax preparer, you do not have a tax planner. What you need is always do a careful analysis. If you have a business and your business is not making profit, don't watch some YouTube video and make a decision based on that. You need to make sure you sit down with your accountant, if your accountant does any tax planning, and analyze the numbers, right? Right now, we have to analyze profit and the state and city that you're located. Now, what do I mean by profit? You have to think about it this way. In order for you to elect an S corporation status, you first want to make sure you're making enough profit. S corporation comes with costs, assuming you have no other employees, just yourself, right? Generally speaking, filing an S corporation tax return will cost you about $2,000 just to file an S corporation tax return. Remember, when you are a single member LLC, you do not have to file any tax returns. But when you're going to make an S corporation election, you now have to file an 1120S tax return. It's Form 1120S, okay? That's going to cost you about $2,000. Additionally, you now have to hire a payroll processing company, okay? Now you have to hire a payroll processing company. That usually costs, I'm going to write payroll, about $500 a year, okay? About $50, $40 a month or something like that. And on top of that, you have to pay state and city unemployment insurance taxes. Every state and city imposes that on any business that runs payroll, even if you're your own employee, right? So I'm just going to write SUI, state unemployment insurance. That's on average about $600, right, based on my experience. So you're looking at automatic cost of $3,100 of just electing an S corporation status, which is okay. You probably can save a lot more in taxes, okay? You probably can save a lot more in taxes, but you have to make that analysis. What if your profit is only $60,000, $70,000, $100,000, $150,000, or whatever that may be, right? So you definitely want to take a look at that. How much is your profit? Sit down with your accountant. If I'll make an S corporation election, how much salary am I going to pay for myself? What is my reasonable compensation? Do I want to elect to be an S corporation from an LLC right now or a little bit later, right? How much profit am I going to have left over? How is that profit going to be taxed? How much money am I going to save on self-employment taxes? And what is my cost really going to be? I can tell you right now, your cost is probably going to be about $3,100 for electing an S corporation status. The second thing you should consider when it comes down to electing an S corporation status, state and city that you're located. So I am from New York State, right? So I'm just going to write here, New York State. New York State has a New York City, right? So I am a New York City resident. New York City says, hold on a second. We do not recognize S corporations as pass-through entities. We don't. If you're going to be an LLC that is taxed, for example, as an S corporation, we're going to impose extra, I'm going to write 8.85% tax, right? So just 9% tax, right? So that means if I'm going to have a profit from my S corporation, so that I can save 15.3% on taxes, that means on the profit, I'm going to pay 9% in New York City taxes, and then I have to incur $3,100 in costs. That makes me think whether I should become an S corporation now or when. That's why, ladies and gentlemen, you should always consult with your tax planner. If you're not doing tax planning for yourself, you're 100%, like literally 100% overpaying in taxes, okay? Now, with that being said, analysis, right? When should you become an S corporation? You've got to do an analysis. How much is your profit? What is your state and city? Does the state and city have any franchise taxes for an S corporation? New York City is not the only one, right? You really have to review that. You really have to make that analysis for yourself, okay? The third thing we're going to talk about, when should you not become an S corporation? And this is one of the most important pieces of this, of this entire video. And a lot of accountants might argue with me, and I'm going to prove everybody wrong as to why I'm right. And I'm going to explain to you when are the times that you should not become an S corporation. Now, before I get into that, it's really, really important for you to understand that in 2018, right, we had what's called TICJA, Tax Cuts and Jobs Act, okay? TICJA created what's called a QBI, Qualified Business Income Deduction, QBID, which is 20%, okay? So that means they give a lot of tax breaks for businesses and small businesses. That means qualified business income deductions, generally speaking, if you're not an attorney, a doctor, okay, or an accountant, or a certain consultant, like a specific consultant and a couple of other industries right there in financial industry, you qualify for the 20% deduction if you're over a certain threshold. I take that back, right? Everybody qualifies for a 20% deduction. But if you're over a certain income threshold, you do not qualify if you're in that income, right? If you're in that category, I should say, which is attorney, accountant, doctor, and certain consultants, right? But everybody else, ladies and gentlemen, everybody else qualifies for a 20% qualified business income deduction. So why is that really important to you when not to become an S corporation? Here's the thing, and I'm going to give you a really, really good example. Let's assume your S corporation is making $100,000 in profit. I'm just going to write profit. You're going to take a reasonable compensation. Remember, you became an S corporation not to pay 15.3% salary, right? You're going to take a $60,000 salary, okay? You're left with $40,000 of profit. $40,000. You became an S corporation because you don't want to pay self-employment tax on the entire net profit. That means you saved, and I'm going to write here, 15.3% on taxes, which equals to $6,000 in taxes saved. All right, that is awesome. Look at this. If you have a profit of $100,000, you save $6,000. That is before 2018. Okay, that is before 2018. Because what happens after 2018, you also get a deduction of 20%. So deduction goes as follows. You get a 20% deduction the smaller off your profit or your taxable income. We're going to assume that your profit and taxable income is the same for this example purposes. So if your business makes as an LLC, right, single member LLC, you're the only owner, or it's you, your partner, which is most likely your spouse, right? You make $100,000 deduction, $100,000 profit, you get a qubit of $20,000. It's a deduction, okay? It is automatically calculated on your tax return. I cannot tell you how many times accountants miss this deduction. If you want to check if you have this deduction in your taxes, check your personal income tax return, line 10, qualified business income deduction for 2021. I believe it's line 10, right? Take a look at that, right? I cannot tell you how many times I've seen this as a missed deduction. It's either, well, it's just missed, right? Now, that is, again, if you are a single member LLC, but what if you chose to be an S corporation with the same numbers right here, right? With the same numbers, okay? But your profit now is only $40,000, because remember, you can only take 20% deduction from from your profit, right? A lower off, right? Your taxable income or your business profit. So in this case, $40,000 will only give you $8,000 in deduction. You lost on $12,000 on deduction. If you are in about 30% bracket, ladies and gentlemen, that is $3,600 that you lost in tax savings. You might say, well, Boris, I still save money on taxes because I saved $6,000 minus $3,600. I still saved like $2,400 on taxes walking away with this. You are correct. But remember, I just showed you earlier, it costs about $3,100 probably on average, not probably, but for sure, right? On average, to be an S corporation, between filing, between payroll and state unemployment taxes. So if when not to become an S corporation, if your profits are under $100,000 and this is your only source of income, right? Most likely, it's a really bad idea for you to become an S corporation. But don't just use this video as a means to make that decision. I am just educating you here. If you want to make sure to see what really works for you, you've got to talk to a tax planner. You have a tax planner, you don't have a tax planner, you are overpaying in taxes, okay? A tax preparer is not going to give you any of this advice, okay? You need to sit down, analyze, and have a strategy for yourself. When should I become an S corporation? Why should I be an S corporation? When does it make sense for me to become an S corporation? And when I actually should not become an S corporation? You don't want to do extra things, because having an S corporation, it's a compliance. You've got to file a separate tax return by March 15th. It's not even April 15th, okay? You've got to process payroll on a quarterly basis. You got to pay all these fees to the accountants to take care of it. Now, that's okay to pay the fees to the accountants to do it, but it's got to make sense to you. A lot of accountants push an S corporation election on their clients so they can make some extra income. That is wrong, because I don't believe it's right. You really have to know your numbers. So first things first, ladies and gentlemen, anything that you do in your business that is related to your taxes, you've got to do some planning. You need to have strategy. If you don't have a tax preparer, you do not have a tax planner, and guarantee you're overpaying in taxes. Thanks so much for watching this video. If you'd like to see more videos like this, please make sure to subscribe to my channel. Till the next time.